Earnings and the July jobs report in focus for investors this morning. Joining us right now to weigh in on the markets, want to welcome Mohamed El-Erian, advisor to Allianz and Gramercy, and he serves, of course, as president of Cambridge University's Queens College. It's great to see you, Mohamed. Before we even just get into what we're seeing in the earnings and we're seeing in jobs, let me just ask you what your take is on this situation with Nancy Pelosi visiting Taiwan and given the anxiety that it seems to be creating in the markets.
Actually, Andrew, is creating less anxiety than I would have expected, given the range of uncertainty. You know, China has a whole range of tools it can use if it chooses to, quote, retaliate for this provocation. And that includes economic and financial tools that impact both the supply and demand in the global economy. So this is highly uncertain. We are in an unprecedented world. And I think actually we should be proud of the way the market is dealing with this.
Proud of the way the market's dealing with. Why do you say that?
Because it's showing robustness. I would have expected that we would see much more flight to safety than we've seen so far. And this market is saying, you know what,
does that suggest to you, though, that the risk is much higher than the market's anticipating?
It suggests to me it's difficult to price the risk. Because there's such a range of possible responses by China. And there's a potential of escalation, or there's a potential that this thing goes away really quickly. So it's one of these awful barbell situations, and the market doesn't quite know how to respond. But it's good that the risk appetite is such that it's willing to hang around current levels rather than preempt anything bad.
What is your take on where the markets are right now? We sort of went on a bit of a roller coaster ride these past couple of weeks now as earnings have come in. Things actually, oddly, I don't know if it's odd or not, strengthened. Some people think that things are actually maybe better than we think. I don't know what you think the Fed is or isn't going to do. Do they keep their foot, pressed against it? I don't know if you're pressing against the neck of the economy, or do you think you let up at this point?
So, we've had the biggest rally after an FOMC meeting ever. The S&P was up 4% just on hearing the notion that we are at neutral. And that is quite an impressive rally. And Joe and I have a bet on, and he got 40% of the way to winning just last week. Now, we will see what the Fed speakers say today. We will see the extent to which they walk back that comment. Neil Kashkari over the weekend walked it back a little bit. We have at least 3 Fed speakers today. Let's see what they say in terms of are we at neutral or not. This is a market that's not driven by fundamentals as much as it's driven by technicals and relative valuations.